Hello and welcome to Pro Trader Strategies Market Commentary for September the 27th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. So we have had some economic data today in the form of flash PMI. Came in better than expected at 51.9, was expected 51.1, so slightly better than expected there. But we got the Richmond Fed manufacturing, which has been quite negative lately. Came in at -8 versus the -2 that was expected, so a bit of a pullback there. And then we got the CB consumer confidence, came in surprisingly higher at 104 versus expected 98.6, so that was a surprise to the upside. We also have Fisher speaking at a university today, so not really expected to say a whole lot other than some economic talk to some students with economic degrees. So I don't expect a whole lot of rhetoric coming out of there and or vision as to what they expect interest rates to be. On to the overall markets, we got crude oil /CL right here, down $1.62 and just below that line in the sand that we talked about, this Fibonacci level, the 50% Fibonacci level. So it's gotten below that. That's really been acting as a support resistance. And then just slightly above that is the point of control, which is where the most time and volume has been spent. I've talked about this quite a bit lately. I really kind of see it wanting to really flatten out with the lack of any direction in OPEC or in the Middle East. We have rig counts increasing, and we also have, we had the OPEC meeting yesterday, but Saudi Arabia and Iran were not really talking at all. As a matter of fact, I don't believe Iran showed up for the meeting, so they didn't come up with any proposed cutbacks. I don't see Iran coming to the table anytime in the near future. I made a joke about this yesterday at the timing research that Iran's not going to come back to the table and say they're going to shut down production until they get that secret underground pipeline built to China. So I don't really see them, after coming off these sanctions, really doing a whole lot. I actually am more bearish on crude oil. I could easily see it wanting to either stay right here where we're at or cruise down and test that $40 a barrel area, which is really the back of my mind, really what is telling me the direction it wants to go in. So we'll have to see if that works out. On to gold, /GC. We have it down quite a bit today. It looked like it was kind of flagging out and was going to look for a pop up, but it decided to push back down to that 50-day moving average, which just seems to be where it wants to migrate to. It's going to be pretty sideways until it really gets a big move up or down. My bearishness is, or my outlook on gold is that it's really not going to go either way. It's going to kind of do this whole back and forth and trend sideways. We might get some big moves up and down, but in the meantime, I think it's going to trend pretty much sideways. And I have a trade that I put on for gold that I'll talk about here in a little bit. The bonds pushing higher, up by a point today. One would have thought that the overall markets would have pushed higher. Maybe bonds would have stayed sideways here with the relatively bad economic data, but bonds pushing higher, and the overall equities as well are pushing higher. As you can see with NASDAQ up 30 points, almost taking back all of yesterday's losses. The outlook being with worse economic data and a Fed that is looking to be a little bit more political than most FOMCs, I should say. So that it doesn't look like they're going to raise rates anytime soon. I don't think they're going to raise it in December. I don't think that they're going to raise it until maybe mid to late next summer, but unless we start getting some robustness in the economy and see some inflation, I really don't see them raising interest rates. So we're going to have to play by that. And if they don't raise interest rates, we do get bad economic data. It is a bizarro world and a bizarro trade, which would lead one to believe that bonds would go up, and as well as the equities, because without an interest rate increase, bonds are going to price that out of the market, and equities are going to celebrate the fact that there's going to be continued easy money. And with the E-mini S&Ps up about 8 points on the day, reflecting the jubilation. As you can see here, when we started getting that bad economic data coming out, the overall markets broke that slump that they were in on the downside and started rallying. So the overall market's pushing higher based on what I can see as the talk breakdown in the Saudi Arabia OPEC meetings, and with the Richmond Fed being negative again and just not indicating any traction in the economy. All right, so with General Mills, which is ticker symbol GIS, decided to go out and get long this stock with the synthetic long stock that I did a webinar on. And the reason why I did that, we've had well over a 10% pullback. They've done well on their earnings. They are a staple. If the economy starts slipping and don't see a whole lot of traction there, I could easily see these staples pushing higher. So we've gotten a nice pullback in here. So I decided to look at this as a synthetic long. Went into the January and bought the 65 calls, sold the 65 puts to create that synthetic long stock, and I collected $1.68. So the break even on that is just above $6 and let's call it 42 cents. So in positive, or sorry, $63.42. So above my break even, or my break even's right below where the underlying is trading. So that is the way we kind of try and build those out. So that worked out quite nicely for me. And if you don't know how to build out a synthetic long, what the rules are, you can check that out. I just did a webinar on it. You can go to protraderstrategies.com and sign up for that. Then with GDXJ, which is the gold miners in the ETF for the junior miners. So this one, there's GDX, which is the bigger gold miners. This is the junior gold miners. It's a little bit thinner markets in there, but it's a higher price product. So I decided to go into GDXJ. Plus, its IV percent was right around 50 when I implemented this strategy. And for an ETF, my rule is above 30. So that was well above there. So I decided to go in there and do a strangle in there, which with the higher implied volatility allowed me to get further away from where it was trading. So I went into the October so I could get that real good theta decay, and sold the 40 puts and the 52 calls to create that strangle, collected $1.05 for that. So my break even on the upside is 53. My break even to the downside is 49. So that is outside of where this resistance is and where this support is to the downside. So that gave me a lot of wiggle room. I don't really expect it to move outside of there. You can see we're starting to build a lot of volume and time here, and it's going to start to get a little bit more comfortable here. I would expect. So that's why I implemented those two. Anyway, go to protraderstrategies.com. Check out that webinar on synthetic long, synthetic shorts. I did a synthetic short and win. That's working out really nicely. Maybe look to cover that pretty soon, but if it breaks below the support, I'm going to kind of hold on to that for a little bit longer. So I'm kind of touch and go on that one. And you can check out Friday's webinar. All right. That's all I got for you guys today. If you can't take that, take it easy.